It's time now for the 360 round. For that, let's bring in our panel to discuss all things gold and its rally. Joining us are Joe Cavatone, the senior market strategist Americas at the World Gold Council, and Max Baecker, the president of American Hartford Gold. Thank you both for being with us. Joe, let's start with you. Great to have you on the show as always. What are your thoughts on this continued rally in gold? I'm just looking at the prices. We're at $38.64 right now.
That's right. Look, right now we're basically seeing a near 46% year-to-date return in the gold market. We expect to continue to see a strong support for gold coming in the form of demand from investors, particularly Western investors and Asian investors, and also that undercurrent that we've had for the last 15 years, but a really accelerated pace of demand coming from central banks. With market risk and uncertainty on the horizon for investors, while the appetite remains high for risk assets, the interest in hedging those risk assets remains top of mind, and it's really showing itself in the U.S. market at this stage.
And Max, what are your thoughts on the rally that we've been seeing in gold? I mean, it feels on a near daily basis, I'm saying, and another all-time high for gold.
That's right. To kind of echo what's been said, there's really nothing that's going to stop it from here. The Fed's kind of between a rock and a hard place right now. If they maintain rates where they're at, the jobs market's kind of taking it on the chin, may send us into a recession. That's bad for the dollar, good for gold. If they cut rates, that's bad for the dollar. Inflation will rip, that's good for gold. And that's kind of what people are seeing right now. We're at a place where whatever happens, gold benefits.
And so with that said, Max, knowing that we have a Fed meeting coming up at the end of October, but we may or may not get some of the important data that they generally use to make those decisions. How is that uncertainty going to potentially weigh on gold prices?
People buy gold because of uncertainty. That's why we're seeing the central bank buying the way that it's been. Q2, I think, is up 41% on average. And that's going to continue. It's one of those things that's just everything you look at, all the data points, the uncertainty showing, the dollar dropping, inflation rising, everything is in gold's corner right now.
And Joe, coming over to you, I saw a report from B of A saying that gold has attracted about $17.6 billion in new investment in just the last 4 weeks. So basically the month of September here. That's its largest tally on record. Is it that we're in such unprecedented times that people are moving so much into gold, or are there other factors at play here?
I think what we're dealing with, and I think Max has echoed it, that the uncertainty in the horizon for what's going to play out with the economic conditions, starting with the U.S., but also permeating in other markets around the globe, is just really putting people in a position of unclear and uncomfortable guidance around how to hedge and manage the risk that they do have in their portfolios. So I think as we look at this week as alone, just looking at the fact that we might have a shutdown of the U.S. government this evening, we might not get data that the Fed needs to run its course in terms of how to handle the rate environment. These are all factors that continue to short-term and tactically move the market. But I think the key point that I wanted to make to your question is that we're strategically seeing a shift away from the dollar as the only preserving risk asset hedge in a portfolio, and dollar-based assets. So the correlation behavior of bonds and equities, the right kind of preservation of assets, whether it's inflationary or stagflationary in terms of the environment we land in, this is what's driving the fundamental shift. It's a shift in the environment for gold. And actually, we're seeing these moves up, and we're seeing these flat lines in terms of when things are stabilizing, and then a move up again based on news. So these systemic moments keep pushing us higher, and actually we're going to continue to see it.
And Joe, you mentioned there people being uncomfortable with the uncertainty. At what point do people become uncomfortable with gold continuing its rally to the upside and making all of these new all-time highs?
It's a great question. And actually, the way to think about what could take the wind out of the sails for gold is to understand a few key components. One of the biggest components for consumption in gold is the consumer themselves. So we need to see a major shift globally in jewelry demand and consumption in that regard. But also we need to see a high level of certainty and confidence in risk assets, really putting other assets risking, the flow away from gold. So kind of creating that competition for more consumption of bonds or equities. And right now, we're still seeing a lot of that happen. Right now, what you're looking at is how to hedge all that. So those are the two things that I'd say. Now, and the only other thing that could really kind of slow the market down would be a major increase in supply coming online. But what we've seen from that side of the table is that that grows at about a 2% annual rate. And we don't see anything that's going to take that to a much faster pace at this stage.
And Max, Joe just mentioned some of the hedging advantages of gold, but with its meteoric rise, I think up about 46% so far on the month, is there more upside in silver or another metal at this point?
Yeah, I mean, silver's had an incredible year. It's up 60% year to date. It's up 35% in the past 3 months alone. I do believe there's more upside in silver. It does tend to be quite a bit more volatile than gold, but I wouldn't be shocked to see, $75 silver next year. And that's just looking at the dollar right now and some of the fundamentals. It's, they're dead on. The fundamental shift in gold and silver and metals as a whole, the world is saying, the markets are saying basically we've lost faith in the Federal Reserve's ability to prevent inflation, and we've lost faith in the government's ability to rein in spending. And so you see the debt, we're running a $2 trillion deficit. We're paying $1 trillion in interest, $1 trillion in interest every year. You look at the UK debt crisis, the French debt crisis right now. If you just Google, any country in debt crisis, you'll see that, global debt is running wild. And that's why there has been that fundamental shift in metals.
Well, gold at $38.66 right now, another all-time high. I'm sure we'll be saying it again before the day ends. Capital Economics predicting we could forecast gold prices hit $4,000 an ounce by the end of next year. But I want to thank you both for being with us to talk all things gold. Joe Cavatone from the Americas at the World Gold Council and Max Baecker from American Hartford Gold.